What's up, traders? Welcome back to Market Decoded. We've got a monster week ahead, and if you're not paying attention right now, you're already behind. Let me break down exactly what you need to be watching because the markets are about to move, and the opportunities are stacking up fast. This week is packed with high-impact data that's going to shake up currencies, indices, and commodities. We're talking central bank meetings, GDP numbers, and employment data, all dropping in the same 5-day window. This isn't a week to be passive. This is a week where fortunes get made or lost, based on who did their homework on Sunday night. Let's start with the dollar. Wednesday, we get the Federal Reserve policy decision, and you already know this is the main event. The market is pricing in a hold, but it's not about what they do, it's about what they say. The forward guidance is everything right now. If Powell even hints at a dovish tilt, we could see dollar weakness accelerate fast. That means euro dollar, pound dollar, all the majors are going to react violently. On the flip side, if they stay hawkish and keep that higher for longer narrative alive, dollar strength continues, and risk assets get hit. Thursday brings us first quarter GDP for the United States. Consensus is sitting around 2.1%. But here's what matters. If we come in hot above expectations, that supports the Fed's narrative that the economy can handle tight policy. Dollar stays bid, yields stay elevated, and equities might struggle. If we miss to the downside, we're opening the door for speculation that rate cuts are coming sooner than expected. That's your risk-on scenario. Gold rallies, tech rallies, dollar pulls back. Then Friday we close out the week with non-farm payrolls. This is always a volatility machine, but especially now when the Fed is so data-dependent. A strong jobs number keeps the Fed hawkish. A weak number shifts the entire narrative. You need to understand that these data points don't exist in isolation. They're all feeding into the same story about where interest rates are heading, and that story is what drives everything. Now let's talk indices. The S&P has been consolidating near all-time highs, and we're sitting at a decision point. If the data this week supports a Goldilocks scenario, not too hot, not too cold, we could see a breakout to new highs. But if inflation data comes in sticky or growth disappoints in a bad way, we're looking at a potential flush lower. The Nasdaq is especially sensitive right now because tech is all about future earnings, and future earnings are all about discount rates. Watch those bonds. Crude oil is another one on my radar this week. We've been chopping in a range, but geopolitical tensions are simmering, and OPEC production policy is still tight. If the dollar weakens on dovish Fed talk, that's structurally bullish for commodities priced in dollars. If we get risk-off moves, crude could pull back hard. Energy traders need to be nimble here. Gold is in a fascinating spot. It's been resilient despite high real yields, and if we get any whiff of Fed dovishness, gold is going to rip. The setup is there. The question is, does the data cooperate? So what does all this mean for you? It means this week you need to be watching the economic calendar like a hawk. It means you need to understand how each data release fits into the bigger macro picture. It means you can't just be a chart watcher. You need to be a narrative trader who understands what moves markets at the fundamental level. I'm going to be covering the key moves all week long, so make sure you're subscribed and notifications are on. Because when these catalysts hit, the opportunities are going to be fast and they're going to be real. And if you're serious about taking your trading to the next level and you want the full framework we use to trade around these events, head over to marketdecoded.com. That's where the real work happens. Let's have a killer week. I'll see you tomorrow.